Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with co-host James Mason. Good morning, James. How are you doing?
Todd, good morning. I'm doing well. How are you?
Doing well. You threw me for a loop when you had your chart up. I was watching the countdown, and
it threw me for a loop too.
You're like, am I watching live or am I watching recording?
And then when I was trying to get my cursor over, because I could see my cursor on the stream, I couldn't actually see it like on my monitors, and so I was trying to chase it around and find it.
That's funny. That is funny. So yesterday, big day in the market with the Fed's announcing a 75 basis point, and the market responded wildly crazy in a good way.
Mm-hmm. Yeah, that's the first time that they've increased it that much since 1994, November 1994, and I mean it's honestly just, I don't know, it's kind of crazy that what logically makes sense just doesn't matter in the stock market. I mean, hell, we saw it yesterday. We saw how bullish it got there intraday. But if you look back at the 94 increase, the market just went on a wild bullish run, and the economy started booming all the way up until from November 1994 up to about year 2000. I mean, that 94 basis point increase didn't cause it for that entire period, but shit, it sure did start it for some reason. But it just doesn't logically make sense, you know? You increase those rates for borrowing, and the market acts positive to it.
Which makes no sense to me, to you, to the rest of the retail trader world, because you would think it would be just the opposite.
Mm-hmm. It's so weird. It's as if we've always been told that money works a certain way to really just brainwash the masses. And there's just a small group of people who do the opposite, and they reap the rewards.
I want to be on that.
I mean, I have no proof on that. I'm just saying.
Right. But I want to be on that.
Weird. Yeah, me too. I want to be an elitist. I'm tired of this commoner lifestyle. All right. So they released, let's see, we got some jobless claim numbers, higher than expected numbers. So probably one of the reasons why pre-market took a hit. It actually surprises me how much the market took a hit, though. The SPY is down roughly almost 8 points. S&P 500 is down 77 points right now, and the Dow futures are down 517 points. But we are currently sitting on a lot of support in the market, but we'll just have to see. While we could have historical support ranges right here in the market, that doesn't mean that that support will continue to be there. So here shortly, hold on a second, I'm actually going to check right now. Okay, so the SPX Wells are still overall bullish, but they actually covered half of their position. So yesterday they closed out with like 1.3 or 1.4 billion to the long side, and now they have 752 million. Now, I know a lot of you people, this is what I hate explaining really to people. Actually, you know what? I'm just going to explain this, and you guys do whatever the hell you want with it. If you script your accounts, and fuck it. I mean, really. I mean, no other way to say it. I mean, so just because the Wells unloaded half of their position, that doesn't mean that they're bearish on it. That doesn't mean that they're going to go short. That doesn't even mean that they're going to sell off the other half. You know, they could have took profits. They could have done like they did the other day like when we were watching it live, they covered half their position to regrip the market. And when they regripped the market, they went long, and it, while they took a small loss because they cut their, loss or took a smaller profit, whatever, they saw that drop coming. They cut half their position, repositioned themselves, and then, they'll stay to make more money. That's how that works. That should make sense to everybody. If it doesn't, I don't know.
It's no different than what we do in our trades. Let's say we take a ticker, we pick an entry, exit zone, a target selling zone, and the ticker, we're in profit, and we're like, we just don't like the way it's trading. Maybe it's the volume is slowed down, liquidity is slowed down. So we'll take some risk off the table. We'll cover, take some profits, and see what's going to happen, which allows us to go in the red a little bit and still be okay.
Mm-hmm.
If we can figure that out, I'm pretty sure the whales can figure that out.
Yeah. The truth is, though, that's not really how most retail traders trade. The ones who become successful, that's how they trade. That is really how they trade. Because that is a form of risk management right there. You lessen your exposure and then regrip the market at a better price. And it makes it a lot easier to be profitable. Another thing, when talking about like how the whales trade and everything, man, you guys have to get out of the retail trader mindset. Like, if there's a big move in the market, I understand that retail traders are just like, oh shit, I'm getting the fuck out. Like, I'm done. I made my money. And everybody keeps asking me. And I'll be honest, it's getting annoying, man. It's getting annoying because I'm not like calling out a single person. Because you guys don't see all the messages I get. I mean, I'm talking about, I get bombarded with messages. Like, I'll get the same question over and over from many different people minutes apart. What are the whales doing? Have the whales covered? It's just annoying. But they don't trade how we trade. Just because a move happens in the market, that doesn't mean that they're going to cover or, take their profits or whatever it may be. These guys make money. When I say making money, like they're not going really for like 3, 4, 5 points. They're going for like 15 damn points, things like that.
Just crazy.
Yeah, like 15 points, like for instance, like on a SPY. I've even seen them go for 30 points before they decided to cover or, take their profits. So yeah, guys, like, I mean, when I keep telling you guys, like, I'll update you when something significant changes, I promise you I'll update y'all. Like, because like when they make a change, however they're doing it on their end, it's not going to move the market immediately. It's to follow. So there's time. If I see a significant change made, there's time. I'll let y'all know. So yeah. I mean, it wouldn't be an issue if it was just a couple people, but man, I would say I probably received that question pushing 100 times a day.
That's a lot.
I was waiting to see how long it would take you just to say.
No, I was just thinking about because there are times that I try to get a hold of you in the middle of the day, and you're like, I'm just thinking that's probably because you're getting bombarded with stuff and just trying to sort through all your messages, the different inboxes you have for social media is probably challenging.
Yeah. But like I told you, that person I'd hired, like, so good with people. And they were supposed to just stay in my inboxes, just answering questions. Because I'll be honest, in between all my inboxes right now, I bet you I have $20,000 of money that's trying to be handed to me right now that I'll never touch because it's just too much. I can't answer those questions. Don't want time. About 20 grand. What was I saying? But anyways, this person worked for a month and they quit.
They
They
took
said,
they took the 20 grand and left.
no, I'm talking about like 20 grand for business wise, but
I know.
like yeah, no, they just couldn't. The questions, I mean, it's not the normal questions. Like, man, if you guys ever want to go through a digital online ghetto, go through my inboxes.
Oh,
You'll see some wild stuff. The shit people say to you, people psychotic. But yeah, that person quit. They couldn't handle it. They said that every time they would see a message come across, they get anxiety because they knew they had to deal with it. I'm like, yep.
that would be like. Never mind.
All right. All right. So, anyways, let's kind of get into it. We kind of started getting off track there for a minute, talking about the wells. But again, guys, like the wells don't trade like us. They don't like if there's a big movement in the market, they're not immediately jumping out or jumping in. That's just not them. That's not how they trade. So yeah, we'll just have to see what the wells are going to do. Right now, they're still pretty bullish, even though they covered half their position or sold it, whatever, which explains the damn gap down. But it is what it is. We'll see if they regroup the market and then bring it back up. Let's see what else. Todd, did you see anything like for small caps?
I'm looking at ticker ADN right now. Advent Technologies, it's up 138%. It's under $3, but it's made a $1.60 move. But it's been a grindy one. I don't know if it's gonna. It doesn't look like it's a break. I mean, it's making a move, but it's been. Let me see here since over the last hour. It's been just grinding up.
Ooh. So they have 51.6 million shares outstanding, which is I like that share structure. Here's what it is. They actually had a decent amount of shares being short with 7.7 days to cover. So that's what this is. This is just this is a squeeze. This is just a small squeeze that's taking place. And I mean, I can't say if it's going to drop or not, but looking at this chart, I would say that it's probably going to drop here soon. But again, there's no telling with the squeeze, guys. So if you try to jump in and short this thing, like it could be challenging because conditions change every second. You know, so like what I say here on the show, that doesn't mean it's going to be true or stay true going into the live market or at any point in the future because everything changes every second. But looking at this setup right now, at this moment, I would just have to personally say that this thing is going to pull back at least one time, bounce, come back up, and then the second go around, it just gets crushed. That's just my personal opinion. But this right here, it was pretty shorted with low volume, so it looks like these guys are getting out, causing still squeeze, which then retail traders are jumping on this with FOMO because they see it going up. And there's institutions who are jumping out from shorting it. They'll probably come back in and beat it back down.
So one thing about small caps that we talked in the pre-market is that June is rare to have any small caps that run. And we've had this week, there's been 3 or 4. They're not coming in a pre-market setups. They're coming in the intraday and they're making the run later in the day. Either people are shorting them, they're getting squeezed. But there's been like yesterday, ticker AERC made a pretty good run, broke over $20. Redbox. We've talked about Redbox a couple times. That hit a new high, and then now it got hammered on the short side and came back down. But it made a run, pretty good run. Ticker CMRA made a run, and actually, I think CMRA is up a little bit this morning. Let me look here real quick. The point is that it's up 40 cents, up 11%. there are some plays developing in the middle of the day, but you've got to be on your screen watching for them. Now, all these plays, I didn't play any of them. I didn't see them, but doing the
Those
old
things are hard to catch.
What's that?
Like those things are hard to catch.
Yeah, you got to be watching for them. You got to be you're waiting for them, and then when they start to move, be prepared quickly to gather your information and make a small entry to catch something. But they're out there if you want to do the homework.
And the thing is, like a lot of times when those things just start busting out with volume and price action, man, it's risky because like a lot of times for me, like I'll have to jump in that trade and I have no research on it. You know, I'm just going straight off of a technical analysis. When I say that, like 5 seconds of TA, just because it's happening so quickly, and that's why you just have to, man, you have to scale in,
and that's why you have to do 5,000 shares. Boom, right? I mean, get it, get in there, kid.
Yeah, okay.
Show us what you got.
Because I have had it to where they start breaking out like that just randomly in the middle of the day and buy that, and then next thing you know, it halts down, and you're just like, you have got to be kidding me. So it's catching those intraday random breakouts like that, especially if there's no news. And that's the thing, like you don't know, like if you have time. Okay, put it this way: if it starts breaking out like that, like most times you ain't gonna have time to check out and see if it actually had news. And so you have to make that split second decision right there.
Yeah.
And during that split second decision, it should never be go all in. I'm just saying, it should never be that. That is the classic retail trader mistake. When they see something start to break out intraday and they don't have a clue why, they take the whole count and they dump it in. And then they usually hold that damn thing forever. So yeah, if you're at work, those trades are not for you at all.
We're 10 minutes to the market.
There's a couple other questions that we had in here. They're predicting that money is going to start flowing back into the bio sector, but man, hell, I don't know.
I believe that on a personal level.
It's been about 2 years now.
What's that?
Go ahead with what you're saying.
I was going to say I read and follow some bio information, and I think the bio market is going to be hot this third quarter.
That's what they're predicting. Oh, I mean, hell, the bio sector has just been bleeding for a year and a half, 2 years now.
Yeah.
I'm trying to go through these comments. I thought I saw something. Oh, but anyways, guys, like again, like I'm not like coming down on anybody about the questions or anything like that, because I do love responding to you guys. I do like, honestly, like 95% of y'all I enjoy talking to. The other 5%, I hate y'all so much it outweighs the 95%.
And right now, if you're wondering which one you are, you're probably never mind.
Put it this way: if they're talking and they're still here in the comments talking, they're the 95%.
There you go.
You wouldn't even know them if they were the 5%. But anyways, no, I do enjoy answering those questions. But man, like it gets exhausting, especially when people reply to now some being smart asses, I know it, and I do think it's funny, but there are some people who are serious, and I'll literally write, I promise you I'll update you, and someone will ask, well, what about this ticker? And I'm just like, my God. Oh God. So let me check the wells real quick.
We're under 8 minutes.
Yeah, so the wells ain't doing too much now. Again, they trimmed their position in half, but like I said, that doesn't mean anything. But while they are still overly bullish, guys, you do have to remember at the end of the day, we are all responsible for our own accounts. And those guys have billions upon billions of dollars. We don't. We are limited to whatever our accounts are. And you never want to put yourself in a position to where you're taking household money just to trade a damn stock.
Right.
That's when your life will turn upside down. And people do it all the time, ruin their lives. So yeah, like, with that being said, like, this is like, while I really do believe in these whales, like, this is also why I'm not swinging for the fences. Like, I'm taking some, I don't even really classify them as like decent sized trades, but I guess they kind of would be, maybe like $10,000 positions of options. And if I get hit, it is going to suck. No one likes losing money. But if I get hit like right now, if I have time on those contracts, I could still scale in later on, once I kind of see a bottom, get my average down just to get out or to lessen that loss. But like, if I went all in and then got smoked, I'd be doomed. So this is why scaling in it's critical. And honestly, like, I can't give out any financial advice here, but in my own opinion, scaling in is the single identifier for who's going to be successful as a trader compared to who won't. That's just my personal opinion.
Well, there's two strategies that you either have to do one or the other. You either have to scale in or truly honor your stop losses and be willing to cut it. And a lot of people aren't willing to recognize a tight stop loss and be willing to cut it and resize or reposition.
Mm-hmm. With options, you absolutely have to scale in, because majority of y'all have been trading options long enough now to know that premiums, man, those premiums will get you. When you start having theta and implied volatility taking over, your trade can move in the direction that you're trading in, and you still lose. This is why you absolutely have to trade scaling in with options. Like with shares, you can hold shares forever. Not that anybody wants to, but like, if you screw up, yeah, you can hold shares forever. But options, they expire. So the closer it gets to expiration, the more money you lose. So for options, man, you guys have to scale in, or you're just gonna lose your money. But
all right, we are about 4 minutes away.
Yeah, so hopefully small caps kick up, man, because I love small caps. Small caps is where, like, I could take those 4 or 5 trades a year and make all my money, make twice my annual money. Small caps, if you can find them, and if they start getting some money, they will. Whew. You can also hold those bitches forever. That's what sucks. Not gonna lie.
True.
QAI. But, all right, everybody. So let's go and wrap it up right there. Appreciate y'all tuning in today. And like always, we'll keep an eye out on the market and update y'all if we see anything. So again, thank y'all for tuning in, watching the show, and we will catch y'all in the next one.